Introduction to Banking, Retail, Corporate, and Investment. Hi, my name is Christopher. Welcome to this journey through the fascinating world of banking. Today we are going to study the chapter Basics of Retail Banking. In this chapter, we'll explore what retail banking is, the different products and services it offers, and how it differs from other types of banking like corporate and investment banking. We will see the key features of savings accounts, current accounts, loans, cards, and digital banking tools. By the end, you will understand how retail banking touches the daily lives of millions of individuals. What is retail banking? Retail banking refers to the banking services provided to individual consumers rather than companies or organizations. It focuses on mass market banking, where customers typically use local branches of large commercial banks. The key characteristics include providing services to individuals, handling a high volume of low-value transactions, and offering standardized products. These services are delivered through both physical branches and digital platforms. In simple words, retail banking is what most of us interact with when we manage our personal finances. Retail banking versus other banking types. Retail banking is for individuals. It offers personal accounts, loans, and ATM branch services, along with mobile and online banking. Corporate banking serves businesses, providing them with business loans, cash management, and trade finance. Investment banking works with corporations and governments to underwrite securities, advise on mergers, and offer financial strategies. The main difference lies in the customer type and the kind of products each banking type offers. Retail banking is the most customer-facing, while the others operate more in the background. Overview of retail banking products. Retail banks provide products that meet the needs of individuals at different life stages. These include deposit products like savings and current accounts, investment products like fixed and recurring deposits, and lending products like personal and home loans. Banks also provide payment products such as debit cards, credit cards, and digital wallets. Each product has unique features suited to specific needs. Retail banks aim to cover all aspects of a person's financial life. Savings accounts. A savings account is a safe place to store money while earning interest. It offers liquidity, meaning you can withdraw funds anytime, though interest rates are usually lower than fixed deposits. Some accounts have minimum balance requirements, and most come with a debit card. Types include regular, high-yield, student, and senior citizen accounts. In many countries, savings accounts are protected by government deposit insurance schemes. Current accounts. Current accounts are designed for high transaction volumes without restrictions on withdrawals or deposits. They usually don't earn interest but often have higher minimum balance requirements. Many offer overdraft facilities and provide a checkbook. They are mostly used by businesses, self-employed professionals, or organizations that need frequent transactions. The focus is on facilitating smooth and quick access to funds. Savings versus current accounts. Savings accounts are mainly for storing money and earning interest, while current accounts are for frequent transactions. Savings accounts have lower minimum balance requirements, but may have limits on withdrawals. Current accounts generally have higher requirements, but no limits on transactions. Overdraft facilities are rare in savings accounts, but common in current accounts. The choice depends on whether the goal is saving or regular business use. Fixed deposits. Fixed deposits, FDs, involve depositing money for a fixed period in exchange for higher interest rates than savings accounts. The rate remains fixed for the term, which can range from 7 days to 10 years. Premature withdrawals are possible but may incur penalties. FDs are safe, predictable investments and can be used as collateral for loans. Sample rates may be 5.5% for 1 year, 6.0% for 3 years, and 6.5% for 5 years. Recurring deposits. Recurring deposits, RDs, require fixed monthly deposits for a set period. They offer similar interest rates to FDs and help build a disciplined savings habit. Terms range from 6 months to 10 years, with premature withdrawals possible at a penalty. RDs are ideal for salaried individuals or those saving for specific goals like education or vacations. They combine regular saving with predictable returns. Personal loans. A personal loan is an unsecured loan for individual use without collateral. It may be used for expenses like medical bills, education, weddings, or debt consolidation. Interest rates are higher, ranging from 10% to 24% per year, and repayment is made in fixed monthly installments over 1 to 5 years. Approval is quick, with minimal documentation. Eligibility depends on income, credit score, employment history, age, and debt-to-income ratio. Home loans. Home loans are long-term loans for buying, constructing, or renovating houses. They have lower interest rates than personal loans because the property acts as collateral. Loan terms can range from 5 to 30 years, and tax benefits are often available. Types include fixed rate, adjustable rate, home improvement, and land purchase loans. Usually, the bank finances 70 and 90% of the property value, and the buyer pays the rest as a down payment. Credit cards. A credit card allows the holder to pay for purchases now and repay later. It offers a revolving credit line with an interest-free grace period. Minimum payments can be made, but unpaid balances attract high interest. Benefits include rewards, cashback, travel insurance, and fraud protection. Credit cards are profitable for banks through interest, annual fees, and merchant charges. Debit cards. Debit cards are linked directly to your bank account, with payments deducted immediately. They do not charge interest, but daily transaction limits apply for security. Authentication is usually via a PIN. Debit cards can be used for shopping, ATM withdrawals, online payments, and bill payments. They provide convenient access to your own funds without borrowing. Credit cards versus debit cards. Credit cards use borrowed money with a pre-approved limit, while debit cards use your own money from your account. Credit cards can impact your credit score significantly, whereas debit cards have minimal impact. Credit cards often have more rewards and stronger fraud protection. Debit cards avoid interest charges entirely. Each has advantages depending on spending habits and needs. Digital retail banking. Digital banking includes mobile banking apps, internet banking platforms, digital wallets, and AI chatbots. Mobile banking allows account management, transfers, and payments via smartphones. Internet banking works through web browsers. Digital wallets store payment details for contactless payments, while AI chatbots provide customer support. These tools offer 24/7 service, faster transactions, and reduced banking costs. Customer service in retail banking. Customer service includes branch visits, relationship managers, call centers, and digital support channels like chat and email. Self-service options include ATMs and kiosks. Good customer service increases customer loyalty, encourages cross-selling, and creates positive word of mouth. Banks with excellent service stand out in a competitive market. Financial advisory services are often part of premium offerings. Customer-centric banking. Modern retail banks focus on customer needs by using data analytics to offer personalized services. This approach improves satisfaction and retention. It also helps banks understand spending patterns and offer relevant products. Personalization is becoming a key competitive advantage. The goal is to make banking more relevant and useful to each individual. Future trends in retail banking. The future includes more personalization, sustainability, blockchain applications, open banking, and a blend of digital and branch services. Technology will keep driving efficiency and accessibility. Customers can expect more tailored offerings and faster services. Security will remain a major focus as digital transactions grow. Retail banking will continue evolving to meet changing expectations. Summary: Basics of retail banking. Retail banking serves individuals with deposit, loan, and payment products. Savings, current, fixed, and recurring accounts meet different saving and transaction needs. Loans and cards provide access to credit, while digital banking expands accessibility. Customer service and personalization are becoming central to competition. Retail banking will keep adapting with technology. Bye. Thank you. Chat any questions. That concludes our session on the basics of retail banking. We've seen how retail banking products, services, and delivery methods are designed for individuals and how technology is transforming the sector. Remember, retail banking is the form of banking you are most likely to use in everyday life. Thank you for joining me on this learning journey. I'm happy to take any questions.